Hello and welcome to BQ Prime. I'm Hiral Dadia. One company from the real estate pack that is in focus is a Godrej Properties with a spectacular set of Q4 as well as FY23 numbers that have been reported. To decode the same and what's in store next, joining us on the show is Pirojsha Godrej. Pirojsha, good afternoon and welcome to the show.
Great to be with you.
Always a pleasure. Firstly, if you could help us understand what is it that has worked? I mean, it's the highest ever quarterly as well as annual net profit that we've garnered this time around. The sales numbers also look spectacular. What are the check boxes?
Yeah, I think we're very happy with the year. I think the best part about it was that it was quite a well-rounded performance. As you mentioned, our sales were the best they've ever been with 56% year-on-year growth. Our cash collections were also the best they've ever been with 41% year-on-year growth. And operating cash flow, which is a very important metric in the real estate business, grew by more than 100% to 3,500 crore this year. And I think what was especially encouraging was that we also had by far our best ever year for business development, where we added 18 new projects with about 32,000 crore of future booking value. What that does is it allows us to ensure that the kind of growth we've seen this year isn't just a flash in the pan, but we're able to kind of sustain it through this very strong portfolio of new projects we've added. We've been helped by a real estate market that I think has been on the upswing throughout the year. Also, I think there's a lot of opportunity for consolidation within the sector, given that leading players have a relatively modest market share still. So I think all of those factors combined with great execution by the team has led to a very strong year, and we're quite optimistic that we can build on this momentum in the year ahead.
Right. So with all of this said and done, think ahead, we're looking at almost an addition of 18 projects, and that entails a booking value of approximately 32,000 odd crores. What are the kind of timelines we are working with?
So we hope to launch the majority of those 18 projects within the current financial year.
Mm,
Typically, you do tend to have a couple of projects getting delayed beyond initial expectations because of regulatory approval delays and so on. But I think what's great about having 18 new projects added, that even if that happens with a handful of projects, we have a large enough portfolio overall to make sure that our launches this year grow considerably over last year. And that should allow us to deliver an even better year from a sales and cash collections perspective.
right. So when you talk about these 18 projects, what's the development or delivery area we're looking at?
So it's about 29 million square feet of real estate between the 18 projects. The delivery timelines will vary. So some of the projects are quite small. We have, projects as small as maybe 300,000 square feet here in Mumbai. Actually, sorry, even smaller than that here in Mumbai in some prime locations. And projects as large as 4 or 5 million square feet. So obviously, the time taken to complete those two types of projects will vary quite a bit. Some of those projects are plotted development projects where the turnaround can be very fast. So we would hope to deliver those within 12 to 18 months. Some of the larger group housing projects may take 5 or 6 years even. So I think the delivery timelines would vary from, in some cases, perhaps as soon as this year to maybe around FY28 or FY29.
Right. And from a demand perspective, how are you seeing demand? Because clearly throughout FY23, it has been pretty strong. And again, what we've seen as a trend is it's the luxury where the demand is higher, growth is higher. Mid-size, as well as if you see in terms of affordable housing, it's slightly muted. A pickup over there is something that was still anticipated. How are you seeing the industry?
I think we play across a variety of price points, and I must say I think the offtake has been quite strong across the board. Perhaps the luxury outlook, people's perception of it being stronger is a little bit more to do with the fact that it had really gotten very bad in that space. Just before the pandemic, the real estate luxury market was actually very slow. So I think off a very low base, it is true that the volume growth there has been higher. But I think mid-income housing has been doing consistently well for the last few years. So it's not as visible. But I do think that we're very pleased with the kind of offtake we're seeing in our projects, both in the luxury space as well as in the mid-income space. And I think if India's economy continues to do well, if
Mhm.
people's perception of the outlook for the economy continues to be strong, there's no reason this demand won't sustain. If you look at a typical real estate cycle, it's usually 7 to 8 years on either end of the cycle. We're now probably just in year three of the upturn. So I think this upcycle probably has some legs still left.
Right. And apart from that, the other aspect was, when the RBI actually took a pause this time around. Now, obviously, with the pause, immediately you will not see that impact relay into the demand side of it. But from here on, if there is a reversal that comes in on the, rate cycle, how big a boost will that provide?
I think it'll certainly help, but I think affordability of residential real estate in India is already quite good now by any historical comparison. I think it's true that interest rates have risen a couple hundred basis points from the lows of the pandemic, but it's important to remember that the lows of the pandemic were really extraordinary lows and interest rates that have never been seen in India before. If you look at kind of mortgages around the 8.5%, 9% mark where they are today, that's still, by most historic standards, quite good. And you have to keep in mind that property prices before the pandemic had been stagnant for 6 or 7 years, while people's incomes had been growing. So, I think affordability of residential real estate is already quite good, and that's been borne out by the fact that despite interest rates having gone up quite a bit over the last financial year, demand was strong throughout the year, and arguably even stronger towards the end of the year. So I do think that obviously if affordability further improves through interest rate cuts, that will be a big boost to the sector. But unless we see further sharp increases and you get mortgages going well into the double digits, I don't see the demand slowing down due to affordability linked issues.
Right. And again, in terms of the projects that we are adding as well, from here on, if you see from a cash flow perspective, how is that scenario looking like? Because bookings are strong, revenue potential is strong, pipeline is strong. So, how is the cash flow situation?
As I was saying, our single highest growth of any metric during FY23 was actually operating cash flow growth, where we ended the year with about 3,500 crores, which is more than 100% year-on-year growth. So I think it's very strong. We are, of course, investing and redeploying all of that capital and more into new business opportunities, which will allow us to sustain a rapid growth rate. But we do think that operating cash flows now are very strong, and will very soon be able to, entirely fund our business development expansion requirements.
Right. And Pirojsha, overall, from a pre-sales perspective, is a 25 to 30% CAGR growth between FY23 to say 25 something achievable, taking the run rate that we are looking at?
It's certainly achievable. I think it will take excellent execution. We grew 56% last year, so we're now at a relatively high base. I wouldn't say 25 to 30% is out of reach, but that certainly will require very strong execution. What we had sort of guided was that by last year we wanted to get to 10,000 crore, which we exceeded by more than 20%, and then grow by roughly 20% compounded a year. I think that's a reasonable base case of 20. I think anything under 20%, we feel we wouldn't really be fully kind of capturing the opportunity before us. And 25 to 30% certainly achievable, but will require very good execution.
Right. And very lastly, overall, if you see between the various regions that you have projects in, is the demand similar across, or are you seeing green shoots in, say, probably a Bombay or a NCR, and few are still slightly subdued?
Yeah, I'd say it's past green shoots now. I think the recovery is well established, probably across the country. You're certainly seeing some markets outperforming others. So I'd say NCR, there's no question, has been the best performing market over the last 12 months, both from a volumes as well as a pricing perspective. But all markets have seen strong growth and I think have good fundamental demand. We saw for the first time across all our four focus markets of Mumbai, NCR, Bangalore, and Pune, we were able to sell properties worth over 2,000 crore in each of those markets, and in NCR and Mumbai, properties worth over 3,000 crore. So I think it's quite a well-balanced performance this year for us across geographies, and that's our sense of how the market is as well.
Right. And any price trends that you're witnessing? Are you seeing price hikes that could be on the anvil?
Again, it's varied a little bit by markets. You've seen very sharp price increases in NCR. So I'd say over the last 12 months, over 20% kind of pricing growth in NCR. Probably closer to high single digits pricing growth in the other major markets. So you're seeing some pricing growth everywhere, some pretty high pricing growths in pockets. What you usually tend to see in a real estate cycle is that the first couple of years of the recovery are more focused around volumes, which is what we've seen here as well. And that's when you start seeing prices go up. So it wouldn't surprise me if some of the other markets also saw price increases of the type we've seen in NCR. But of course, I think all our business plans and new investments are basis kind of as is where is pricing assumptions.
Right. Overall, I think it's a great story to look at as well from a sector perspective, because clearly, I mean, this has been a sector which has always been in the woods. A lot of, back and forth that keeps happening, but the last couple of years have been fantastic, and hoping this growth story continues as well. Once again, congratulations and good luck for the coming quarters as well.
Thanks very much.